As we gather today for RFF, we asked various leaders to share what's on their minds as we think about the opportunities and challenges for inclusive finance today.
As we move on from COVID, we see the global food crisis, increasing energy costs, and real challenges in terms of food security, challenges in terms of livelihoods. There's a real risk that the livelihoods that customers depend on are being eroded, and that's the foundation of financial services.
And the crises people are facing are becoming more frequent and complex.
And the poor, our farmers, our fishermen, small entrepreneurs are the hardest ones hit by every disaster. With much smaller resources than most of us in this room have, they need integrated approaches to managing climate change. Financial inclusion, having access to emergency loans and forecast-based financing, incentivizing a savings culture, designing climate risk insurance, and empowering them about investing in productive assets.
There are multiple different ways that climate is affecting people who did not cause the climate crisis. And the fact that we have these digital payment rails and new financial tools and interventions is giving me hope that as hopefully the rest of the world is working on mitigation and reducing the production of additional greenhouse warming, that actually people will be able to adapt to their situation and even prove resilient and hopefully grow with it.
Digital solutions have opened the door to new products, delivery channels, and provider types. But these also pose new challenges and risks to consumers.
This whole concept or construct that smartphone availability will lead to access and usage, I think that does get stressed a little bit when we are dealing with low-income segments. In India, for example, I have lots of choices, given the smartphone, given the phenomenal growth of the unified payment interface that we have in India, seamless connectivity across banks. But how many poor people understand it, are willing to use it, and really have not been shortchanged by it? I think that's where we are sort of struggling.
While fintech is good, especially for those in urban areas, it brings down the cost of banking. For those in rural areas, it actually increases it because they have to get internet, they have to get a good phone, a smartphone, and all of that expense that they have to spend. So that makes it more of a challenge in penetration.
And with these changes, the provider landscape is increasingly complex.
What we're seeing in the digital transformation is a couple of things happening. One, there are fintechs who are piggybacking on all that we've learned from 20 years of microfinance, who don't in any way have the explicit mission of quality products for low-income customers, just profitable products for low-income customers. And so there's a challenge from the how will MFIs react to more competition coming from providers who don't have the same cost structure that is built into designing products that are responsible.
We also see new risks, like with any innovation. The key one, I think, is who owns the client relationship in these structures. Is it the MFI or is it the provider of that insurance product, the third party? And we also see more and more non-financial companies entering the financial inclusion space, particularly with buy now, pay later schemes, which could really lead to increases in over-indebtedness.
All the latest events that have happened with Bitcoin and with crypto assets in general are an interesting point of entry to the idea of responsible finance and how new technologies are always a double-edged sword where things can work really well and they can also work really badly. So there's always a need to be thinking when you do something which is new or innovative to think about what could go wrong.
Many experts point to the role of policy and regulation in helping to guide this new era.
Things can go the right way or the wrong way, and we need to prepare for that by informing customers about the actual risks. By also, when needed, establishing regulation in order to curtail the potential risks of certain instruments.
Well, over time, government really needs to work on infrastructure, making access to internet. With the telcos are doing a great job, and I think that we will start to see increased penetration at the bottom of the pyramid.
The other thing that we've seen that needs to go hand in glove in any part of the world is that increasing access, even through the infrastructure we're talking about, is also about a parallel focus on consumer protection. so that we are not solving one problem and creating a new one. We really want to make sure that at the end of the day, people have access to utilize and reap the benefits of a full suite of financial products and services.
Overall, I think we are at a very exciting point in our journey where I see the industry evolving to meet the needs of the financially excluded. So this is really great time to be here.